Disclaimers. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Even further, this is not a solicitation to buy or sell any security ever. This is not advice, and past performance is not necessarily indicative of future results. Okay. So I'm going to start broadly. I've said this before, to be a successful, this is my opinion, to be a successful trader, you need three things. And it isn't obvious that you need three things because it seems like you only need one thing. So I'm going to go through that, right? So you want to focus on the long arc of your career, not like Thursday, like the long arc of your career, being profitable 9 out of 12 months a year for 10 years, right? It's not about that trade, that day, that time, right? That's why as a successful traders, you don't really get too caught up on a single trade. It's just one more data point. Okay. The first thing you need of the three is a process, which we just call a plan in finance. And TradeMachine is built for this. It's exceptionally good at this. And a plan is what to trade, when to open it, and when to close it. And if you're thinking to yourself, well, if I know what to trade, I know when to trade it and when to close it, isn't that enough? Like that should be enough. And it would be enough except for one problem. We're human. We're human. And by the way, I didn't mean to say that being human was a problem. So what else do we need? Since being human means just having a good process or plan isn't good enough, well, you need patience. And you need patience in your plan, so your process, but you also need patience with yourself. Okay? For some people, this is actually quite easy. It's remarkable. I am not a patient man, and this was very difficult for me. I have met people for which this is not hard, where patience is just, it's written in pencil. Okay, and the third thing is effort. So I call it the PP&E to be a successful trader. And there's two things about effort. On one side, it will probably be harder than you think. And I know I'm not supposed to say that. I'm supposed to be selling you software and telling you that it's easy. But I have a real problem. I tell the truth. So it's very, very hard for me not to tell you the truth. But I always finish with good news. Since it will probably be harder than you think to be a successful trader, there is good news. Therefore, it will probably be more satisfying than you think it will be. And that's the reality. You need a process, you need patience, and you need effort. Okay, last sessions, we looked at what triggers we have when a stock has dropped and might recover. Which types of stops, which types of stocks, how much do they have to drop? How do you play the recovery? Okay, we looked at spreading the sell-off, and we did that, which is the most complicated strategy we talk about. So we kind of started with the hardest one. It's a multi-leg trade, three-legged trade. We looked at tech stocks and financials, right? Then on Tuesday, we also looked at what happens when a stock has dropped and might recover, but we looked at a different trigger. It's buy the sell-off, spread the sell-off had AI as well, sorry. But this was just a two-legged trade. It was easier, less complex. And we looked at tech, financials, and healthcare. And today, so this session, we're going to look at when a stock is strong and might rise. So we looked at what happens when a stock has dropped and might recover. Now we're going to look at when a stock is actually strong, okay, and it may rise. And we're going to do so with the pre-earnings momentum diagonal call spread with AI, okay? And we're going to look at it with the tech, financials, and healthcare. And the reason we want to look at multiple sectors, which is what I'm starting to introduce now, is that oftentimes we talk about things like a bear market and a bull market. Well, other than COVID and the recovery from COVID and all these things, in a normal, healthy market, yes, we can say we're in a bull market or a bear market, but in reality, certain sectors are almost always in a bull market and certain sectors are almost always in a bear market. They just flip. And so you want to have exposure to these industries, right? So maybe you have these great trades for when stocks are falling apart and they might recover, but you're all tech and tech is just going up. So you're not getting any trades because it's just not happening, right? They're not dropping. Yeah, but if you had financials in there, you'd have gotten some triggers. Alternatively, when a stock is strong and might rise, you say, well, I'm only getting tech signals. Yeah, well, don't you worry. We get financials and healthcare. So in my opinion, you need at least two semi-uncorrelated industries. So I love tech, so for me, it'd be at least tech and financials. I offer healthcare because that's another one which is like semi-related. Okay, but you want at least 2 sectors per strategy. If that sounds complicated, don't worry, it's really easy. All right, I think that's the end of the slideshow. Now I'm just going to do TradeMachine. Oh yes, I'm also going to do multiple time frames today. Okay, so that's it for the slideshow. And we'll now do TradeMachine. Max, do you see my TradeMachine? Guys, I'll ask in chat. Do you guys see my TradeMachine?
Yes, sorry,
Okay.
I was muted. I muted
Okay.
myself.
No problem. Okay. So this time we're gonna pick it. So this is how you do it in TradeMachine. Just we're gonna go to the backtest tab, nice and easy. By the way, we're gonna create 50 trades for ourselves right now together across 3 different industries. We're gonna go save backtests. Today we're doing the pre-earnings diagonal with AI. So I just select that and I load it. It's gonna load a single ticker. Just let it do its thing. No problem. Great. Let's switch it to 3 years. Okay, I said I was going to do tech, tech, financials, and healthcare. So I'm going to go to portfolios and I'm going to start with the NASDAQ 100. Everyone has these portfolios in TradeMachine. Everyone. The NASDAQ 100 has 100 companies or 101 companies because there's Google. If you're a platinum member, meaning you're an annual member, your back tester, this tab we're looking at, can go up to 200 stocks at once. If you're not an annual member, then you can only get 50. So it'll stop at 50 and it'll tell you, hey, we've only done 50. So there's a reason to go annual and say, well, why do we do that? Because we have to commit more resources. We have to upfront commit to AWS, right? Okay, so what we're going to do is see how this does in tech over 3 years, and then we'll also do it in 6 months. But I'm going to save the 3-year results. I'm going to take a little picture of it so we can compare it to the other sectors. So let's let it do its thing. Probably the most interesting part of our presentation is watching my screen load backtests. So I hope you're enjoying this on your Thursday afternoon or evening. Oh, by the way, platinum members or annual members also get a backtester, which is 5 to 10x faster. So the reason mine is going so fast is because I'm a platinum member. And if you want to become an annual member, just email support. You get your price times 12. There's no you just get your price times 12. That's it. It's just very simple. All right. So at the end of this, oh, by the way, you should know this. When this is all done, you'll be able to download every single trade from every single stock across all the years in one file if you want to. That's a new thing we've added. Okay, so here's how it did. I'm going to take this snapshot. And just so you guys know I'm not messing around, there's a check mark. You know I'm not messing with the numbers when I bring it back. Okay, let's put this out of the way. Okay. All right. So this trade, if we click edit, we can see what the trade is. This is a diagonal call spread. The reason it's called the diagonal call spread is for 3 reasons. First of all, well, actually 4 reasons. First of all, it's considered a spread because you're long an option and you're short an option. Keep it simple. You're buying something and you're selling something. That's automatically called a spread. The reason it's called the call spread is because you're doing it in calls. Okay. The reason we call it a calendar spread is because you're buying an option which is the closest to 14 days from expiration. And you're selling a call which is the closest to 7 days from expiration. So it's different calendars, different expirations. And the reason it's called a diagonal is because the strike prices, the deltas, are different. So this is a call, calendar, diagonal spread. In particular, oh no, it's okay. I saved it. Don't worry. I saved it. We don't have to watch it. Another thing is this is a custom earnings trade. So this trade opens 14 days before earnings and closes the latest 1 day before earnings, but it doesn't really close 1 day before earnings because this strategy closes everything with the front month options. That's option speak for saying this entire trade closes when this 1 week option expires. Okay, so on average, this is a 1 week trade, give or take. Okay, a 1 week trade. 14 days before earnings, you open it. You look for the options that are closest to the one seen on your screen. Enter the trade. You exit the trade about a week later. Coming soon to TradeMachine, we're actually going to tell you what these options are in real time. You don't have to look it up. We'll say this ticker, this strike, this ticker, this strike, buy, sell. Okay. Now, don't worry, we're not going to watch all that. Remember, these were the results over the last year. So that means 3 years. That means we were making, this trade was doing 12% per week, right? This is a 1 week trade. So keep that in mind, a 1 week trade. Okay. Now, how's it done over the last 6 months? We're still in tech, and then we're going to go to other sectors. So this is our benchmark, right? Hey, if I can make 12% a week, that's really, really good. The win rate's 57%, great. Something that wins about 6 out of 10 times, I'm in. I don't care terribly about win rates. I don't want something that has like a 20% win rate. I'm much more interested in the average trade. I do have a minimum win rate. Maybe 40% is my minimum win rate. I'm interested in the average trade. I'm willing to take a little bit more risk, which means my win rate will go down for larger results. Okay, now we're going to do this 6 months. This should go much faster. This is still in the QQQ, so this is still basically technology. It's the largest 100 companies on the NASDAQ, so it's not all technology. It has companies like Starbucks, but close enough. All right, and you can see how the last 6 months have been relative to the last 3 years. So what we're looking for is consistency. So we were getting 12% over the last per week over the last 3 years and 15% over the last 6 months. I wouldn't say these numbers are actually different. This is very few trades. This is for the win rate is 65% to 57%. It looks like the signal's holding up. This is kind of what you want to see. Okay. So now that I've done that, I feel really comfortable with tech. I'm going to do the 3-year backtest one last time, and I forgot to show you how to add alerts. Then we're going to go to another sector. So we'll go in here and we'll go to financials, and then we'll go to healthcare. We'll compare it to our benchmark. If an industry or a sector has strong results overall, that's what these are. These are the overall results, right? These are overall results. Then I'm okay going through and finding the best ones, the ones that have performed the best. If a sector does not have good overall results, then I'm not going to start adding alerts to it. I'm not going to take a sector, and I'm going to show you an example of that. I'm not going to take a sector which overall has bad results and try to find the best performing ones. That to me feels like luck. I'm trying not to do that. If that sounded a little hard to understand, it's the third example I'm going to show. So it's a sort of a prelude. Well, a preface. How about that? All right. Cool. Now it's done. So what I would do is I would now, since I like these overall returns, I'm good. I like this. Now let me find the best ones. I'll sort by average trade. I'll take the ones that I want alerts for. That's 4 trades. These are all 1 trade and 1 trade. Not convincing enough. 3 trades, 2 trades, Apple. 6 trades, 2 trades, 2 trades, 3 trades. I'm just looking at the wins and losses. BKR, Priceline. It's either Google or Goog. Doesn't matter. Biogen, Starbucks, SGen, PCAR. I'm going to go through the whole thing. CDNS. Oops. Don't need that. Charter, CDNS. Okay, I'm probably good there. Yep, TXN. TXN. Is there another one I want? Average trade is 22%. I'll take this with Trade Desk. That's okay. A 3-1, 3 wins, 1 loss. Okay, so I like those. Now, if I want to know when it's 14 days before earnings, and whatever technical conditions this trade has are satisfied, and I don't want to just keep staring at my screen, I go to add alert. It's going to take those tickers automatically. It's days before earnings with technicals. It's 14 days before earnings with technicals. The technicals are that the stock is above the 50-day moving average. Remember, I said on the slideshow, we wanted when a stock is strong and may rise more. If a stock is above the 50-day, I consider the stock to have strength, roughly speaking. Okay. All right, I'm going to give myself a note and say pre-earnings, diagonal, with AI. But this time I'm going to tell myself which sector it is. This is tech. And all I have to do is click add alert. Okay, we've just added 19 alerts. You guys, we've just added 19 alerts together. Okay, but that was tech. What about financials? And remember, we have a benchmark. This may surprise you what happens here. Okay, so here's our benchmark. This is tech. Great. 12% a week. I'm in. I'll take it. Over 6 months, it was 15%, which is roughly the same thing, maybe a little stronger. Great. Signal has strength, has persistence. I'm in. But I want to be diversified across sectors, because if tech is in a recession, then nothing is going to be above the 50-day moving average, and I'm never going to get any alerts. And I'm just going to be sitting there saying, well, what's TradeMachine doing for me? So while if tech goes into recession, it's quite possible that financials are showing strength. We certainly saw the opposite this year. Tech was doing great and financials were in a recession. I'm not talking about the last 2 months when everything's going up. Now, remember, I'm going to try to hide it. Do you guys think financials did better or worse than tech? You can tell me in chat. Do you think financials did better or worse? This is a momentum play. It's pre-earnings. Anyone? It's 50-50. Better. Okay. Worse, worse, better, better, better. Ready? Ready? Look at that. More than twice as good. 30% per week on average, and a 61% win rate. Now, I ask you, do you also want to have some financial stocks in here for this in your alerts? Yeah, I do. Yeah, I really do. Since this qualifies for me that the overall results are good, I'm willing to go and cherry pick the best. So I'm going to sort by average trade. And here we go, AIG. I have a great story about AIG, but I won't share it now because I was on the floor when AIG went bankrupt. Okay. Oh, oops. Bank of America, that looks juicy. SPGI. So what I'm doing is, guys, is I'm looking at how I'm choosing. I'm looking at the average trade. That's all huge. But I'm also looking at the number of times it triggered with wins and losses, right? I don't want it to just be one. I know this is, some of you may not agree with this and don't do it, but I don't mind 3 wins and 3 losses if the average 1 week trade is 46%. That's fine with me. I know for other people, like, no, I like more wins and losses. No problem. These are my alerts, right? No problem. Schwab 4-1, PNC. There's a 2-0. There's a 2-0. What else we got? There's a 2-0. There's a 3. It's Visa. Big time. Big fan of Visa. BX, American Express. Okay, that's about as far as I'll go. Well, actually, I really like MasterCard. 4 and 2, 15% a week. I'm in. Okay. SIBO? Yeah, I'll even do SIBO. 3 wins, 1 loss, 12%. I'll do the same thing. I'll click add alert. It's already set for me, and I know what this is. This is pre-earnings, diagonal, plus AI, but these are financials. All right. So I added 19 for tech, added 20 for financials. That's 39. So we have 39 trades together already. Just loading it up. And now, since I've gone across sectors, if one's doing poorly and one's doing well, I'll still be getting alerts. I'm not going to just miss out on alerts and just wait for TradeMachine to tell me something. Okay, now I'm going to try something else. Remember, this is our benchmark. This is tech. Financials crushed it. That's why I'm adding them. That's why I showed it to you. And I said, let's check healthcare. Okay, here we go. Healthcare. Now, tech did nicely. Financials did phenomenally well. What do you guys think about healthcare? Worst of the 3, worse. Did you dedicate a certain percentage? Better, worse, better than tech, worse. Okay, worse, worse, better than all, better than all. Interesting. All right, is this done? No. Okay, well, let's see. We have if we could have made a market here, actually. All right, here's our benchmark. Still there. Nope, 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 nope. Let it load, let it load. Okay, ready? And negative. So the reason I point this out, I'm gonna just remember, you know what our benchmark is, I'm gonna move it, is what I could do, right, is go to average trade and find the ones that have worked. These are awesome, right? I don't want to do that. I don't want to start cherry picking the best out of a sector that isn't doing that well in this industry. And the reason is I do believe there's at least a fair amount of correlation between stocks and sectors. Obviously, there are outperformers, right? Like Apple is on an island. I wouldn't compare Tesla to GM. Okay, fine. But I don't know all these companies. I'm not a huge researcher in the healthcare space. To me, they're related or semi-related. And if in general there isn't this pre-earnings optimism for the sector, then I don't really want to go stock by stock. Like to me, it's a pass. It doesn't have to be a pass for you. You could do the same thing, sort of say, oh, look, Biogen is good, ABT is good, right? You could do it. For me, that's a no. Okay. But remember what I said at the beginning in the slideshow. I want at least two sectors for every strategy, at least two. If I'm really gung ho and want to spend some time, I can go through every sector: utilities, basic materials, industrials, consumer staples, energy. I mean, as you wish. And the reason I say as you wish is because of what I said at the beginning. How much effort do you want to put in? You don't have to. It's up to you. TradeMachine will make the effort easier. Can't do it all for you. All I'm asking you to do, all TradeMachine asks you to do is click some buttons. Okay, that's the full presentation for the night. We're going to go to live Q&A. I'll stop sharing my screen. Someone asks, is XLY available? I think it is. No, it's not. Okay. Well, remember, I should tell you guys, you can create any portfolios you want, just so you know. So click on portfolios and click new. And you can, if you want to do XLY, type in XLY, and then you copy and paste the tickers here. Okay. So you are not limited to the number of portfolios we have. We just do you the favor of giving you some, a pretty big list. All right. Let me go to the Zoom. I will stop sharing. I will start my video. Mr. Katz, if you don't mind.
Okay, I started my video. So I'm back.
Nice to see
All
you. All
right.
right. Go for it.
All right. The first question in the chat is, it was a good one. OG has said the only way to hedge an option is with another option. Would a strangle or straddle qualify as a way to hedge? The answer is, as Ophir is shaking his head, is no, except it will hedge your delta exposure, but it will double your volatility exposure. Because if it's a straddle or a strangle, you're short on the put side and you're short on the call side. You got two shorts. So you're
Or
short
two longs.
volatility or calls. You're short. You're short volatility. If you're long, if it's a long strangle, you're long volatility on both sides. So the answer to the question is no, except for the delta, which would be hedged. All right. Cute nephew sweats. I assume they're talking about you.
Thank you. This is actually Abercrombie and Fitch, and there's a hole in the back, and I'm throwing it out. This is one of the last times. The last time you guys will see this, for those of you who are CML Pro members, is when I announce this end of your CML Pro webinar, which will be Saturday in a week from now. So last time that the new year, the year will end with this sweater finally being retired after.
All right. I got to know, because I'm partially colorblind, what color is that? It
Yellow.
looks like mustard to me.
Yeah, I'm yellow. Yeah.
Okay. All right. All right. I was expecting worse. All right. Complimenting how fast the platinum trade machine is. TradeMachine is keeping you, let's see, Dan Noble is saying, TradeMachine is keeping you from getting in and losing money when the odds are not in your favor. That's right, Dan. It puts the probabilities in your favor. It's not a guarantee. You can still lose. You could have 6-0 going into the trade that you put on, and after that trade, it's
6-1.
6-1.
Yeah.
All it can do is put the odds or probabilities in your favor.
And as Jason likes to say, would you rather get into a trade that's won 6 times in a row or a trade that's lost 6 times in a row?
Yeah. Yeah. All right. Someone commented, I believe, regarding the financials that they were really bearish at the start of the year.
Mhm.
I believe that's the case. And now we have a good question. Is TM going to be alerting for these alerts, or do we have to build it ourselves? And the answer is you have to build it yourself. That's how you get up to speed on using TradeMachine. And you may not necessarily agree with everything that Ophir did in qualifying which alert he put in and which he did not. Um, I don't personally, I don't like to go below 66% as far as the win rate.
Mhm.
That's my preference. I do 3 years, 2 years, and 1 year, and I need to see consistent winning percentages for those three individual periods, and then I will add an alert. But you can do you, but you should do it. What I'll probably do, as I did on Tuesday, I'll pick one of the portfolios and I'll create the alerts that I like from that portfolio, and I'll post it in community the next day. So tomorrow morning, you'll see 14-day pre-earnings, long call diagonal
With
with
AI.
some level of alerts.
Don't forget
And
the AI one. The AI.
if anybody has any preference of the financials or the QQQ, you can put it into the chat and I'll add them up and decide which one to do. Do you dedicate a certain percentage to a sector? I assume that means a certain percentage of the alerts that you're going to take.
Do you?
Do I? I do not.
Either.
Okay. So we don't, but you could. All right. Someone is saying that you have the opposite of the problem that I have. I usually go too slow. They thought you were a little too fast, but
Mm,
they're going to watch the replay since we're now distributing the videos.
that's right. That's right.
All right. Better than tech. XLY is not, but you could create it as a custom portfolio.
Right.
Got here late. Can we get the recording? Yes, the recording will be available tomorrow.
Mhm.
Okay. How many trades per month or year the tech and financial alert should generate? Well, since this is pre-earnings, every company has 4 of those a year.
I can actually show it. So hold, let me share my screen. I'll show the I still have that little thing saved.
Okay.
So do you guys see the wins loss thing? You see this, right?
Yes. Yes.
Okay, so that's 280 trades, but that's over 3 years. This was a 3 year, right?
Right.
So, call it 90 trades a year. So, and it's quarterly, right? So just this alone, although in fairness, I didn't take all of these, right? I took like 10, I took 19 of them. So in general, this one will probably give me this with I can stop sharing my screen. This with the other sectors. I don't know. Uh, it's different how many I get and how many I take. I probably get about 150 a year. I probably take fewer.
You only get 150 alerts or this alert?
Just this.
Okay. All
Yeah.
right. Thank you.
Yes.
Because I was going to say I get
No,
100.
I have my phone is
Right.
blowing up every morning.
Right. But keep one thing in mind. Um, when you get the alert, I mean, today is December 21st, and we went back 3 years from December 21st. Let's say you just missed an earnings and it's going to take 3 months for you to get another alert, even for Apple. You have to redo the back test with the current end date being that day's date, just to make sure that the results have been consistent. Now, in this one, if you didn't miss any of the earnings, it's going to be the same. If for some reason the stock was below the 50 SMA and it didn't give you an alert, there may be some changing conditions. When I get an alert from my alert database, I always run it after I reset the 3-year test period so it ends on the current day.
So what he's saying is when he receives the link, he clicks it, then he just clicks 3 years again. 3 years, 2 years, 1 year. He does 3, 2, and 1. So that's all you have to do. Just do it. Just to make sure.
Yes. Okay. Now, how does one manage risks related to the trade? When do you cut losses? All right. Now, if you looked at the alert, there were no closing technical conditions. The trade closes at the end of 7 days when that short option expires. So strictly speaking, that's that's how you're not really cutting losses, but that's when the trade's over.
Yeah, that's
What
what the
I
back.
do, what I do, even though it's not back tested, and Ophir can comment on it or tell us what he does if he does anything different. I'm always looking at that short option, especially if the stock is not going up, but starting to come off. And if there's no more juice in that short option, I end that trade and make a decision. Do I still want to be long the stock in some option strategy going up to, but not including the earnings date? That's what I do. So if my short option I sold for $1.10 and the stock came off and now there's 9 cents of premium left, I'm closing it. I'm taking my loss at that time on that trade and I'm reevaluating. If there are 10 days left before earnings, I could back test a long call spread for 10 days, closing right before earnings, if I still think the potential for that stock to rally is there. But that's custom strategy, custom alert. You can make it as simple or difficult as you like.
Yeah, to follow the rules of the back test, if you just don't feel comfortable with the knowledge that Max has, right? You just close after a week. That's it. It's just over. Good, bad, or ugly. It's over. You move on. Follow the plan.
Okay, moving on. How could TradeMachine help with day trading zero DTE SPX options or other zero DTE options?
As of right now, not really. We will have a zero DTE product, but as of right now, no. If you signed up for TradeMachine and only want it for zero DTE, and it's been less than a month, email support, tell them why. I don't want to take your money. We'll give you a refund.
Right. So it's a future, but it's not currently available
Right.
and probably not in the next 2, 3 months. Would that be a fair statement?
Yeah, no. What we're adding a TradeMachine next is that when a back test, like you're on the Today tab, or you get an email or an alert. Well, actually, I'll show a picture of it. I'll show you what it's going to look like. No one has seen this before. I don't think. Did I show this last time, Max?
I saw it, but I don't
You
remember
did?
if we were in the Zoom or not.
Okay, interesting.
It could have been before the last Zoom started.
Yeah. All right. So let me take this out. Let me share my screen. This is just a mock-up. Just don't get too excited. Can you guys see my screen? Yeah, you see it, Max?
Yes, I do.
Okay.
Sorry.
It'll say, hey, this is active, and it will tell you which options that is short and which options to get long. Literally. You don't have to look it up anymore. You don't have to guess. That's it. It tells you the trade per the
Okay,
back
so
test
when do you see that?
when it's active. So whenever a back test is triggered, that'll show up. You'll also get that in your email, so you don't have to come to TradeMachine. And if it's not active, by the way, pardon me, it'll look like this. Not active, last triggered, November 6th. So when you're on the backtest tab, you're like, oh, it's not active right now. Cool. But remember, anything on the Today tab or anything that you're getting an alert for, it's gonna be active. So it's active.
Okay, but I think the question is it's active at 11 o'clock New York time,
Yeah.
but at 3:30 or 3:45, is it still active?
Yeah, that I believe we will be checking those conditions, but I'm not sure. It
Okay.
could be like the Today tab where once it's on there, it's on there. So,
All right. Okay.
all
All
right.
right. What I do because I have dabbled in zero DTE, not to any great extent, but I have played around with various strategies. Um, and I did try to back test one DTE, putting it on towards the end of the day, whether it's a 30-point wide butterfly around where the SPX is
Yeah,
trading,
it's
or
possible.
yeah,
Yeah.
or selling,
You
or
just won't
selling.
get an intraday signal. But yeah.
Right,
But
right.
yes, you can look where the day you can look where Thursday closed. Like we could look like where today closed. I- Am I going to want to get in right in Friday morning?
Right.
You could do that. But that's not, I mean, the spirit of zero DTE is that intraday window, I think.
Yeah. Yeah. It's a
Yeah.
workaround
Hmm.
just to see if I could find anything of value.
Hmm.
I have not found a really good trade yet, but I
No,
keep looking. I
that's part
keep
of the
looking.
reason we don't have a product, just so you know.
All right. All right. We'll discuss this on another Zoom. ANF has been a runner. I assume that was from one of
Abercrombie
the
and Fitch.
backlinks.
That's what I'm wearing.
Yeah. Yeah. Yeah.
That's the
Yeah.
shit
Yeah.
right here.
Okay. Ophir, I value all the hard work your team has done. Have you and the team considered giving one-on-one tutoring how to utilize this amazing product?
Well, it's kind of what tonight is and what you have Max and Community.
Yeah, so it's one on a few or one on several. Um, Max sounds much different than I imagined.
Me too. No, I'm just kidding.
When I listen to the recording, I sound different than I imagined as well. Um, yeah, now I hope I'm not speaking at a school of fear, but in the future in community, we will have direct private messaging.
I'm
Is
not
that
sure. I haven't
okay?
decided yet. Just so you know, guys, if you're wondering why I wouldn't have direct messaging in there, it puts the burden of liability on us. If someone then offends someone else, just someone signs up a nobody and they call someone else a bad name. Well, that person who got called a bad name could say we created an environment where they feel offended. And so then I say, well, then forget it. Because what I don't want to do is read 16,000 direct messages and make sure they're all nice. So I don't want to do that to myself. I'm
All right,
sorry. I love America. I'm American. I was born here. It's the greatest country in the world, but we're very litigious people. We're very litigious people. If someone offends us, lawsuit,
I
lawsuit.
hear you. I was just thinking as a potential way to have a brief one-on-one
Yeah,
with someone who had
just not
questions.
worth the liability. I'm sorry,
Okay.
guys. I'm
Yeah,
sorry.
no, 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 no. It's your business. You got to run it
Yeah.
smart. We are going into the next earnings season with optimistic projections. How do we position for such condition?
Like we just did.
I think we look at the successful backtest, or we check out a potential backtest and see if it is successful in the stock that you're interested in.
Oh, I should say this. Tuesday's session will be another strategy. So this will be our fourth strategy. It'll be fade the dip with AI. So we've been buying options. We sold options in the spread the sell off. We bought options with buy the dip. We bought options here. We're going to sell options again. So
Yes. Fade the dip plus AI.
plus AI.
All right. We've looked at spread to sell off 1 by 3 by 2. Should it be a credit trade to put
Yes.
on?
Yes.
Absolutely.
Yes.
It must be a sufficient credit.
Yes.
If we get bullish and bearish signals with 1 day difference, like Walmart, which took me down, is it okay to take both trades if they meet the rules? I've learned a lesson the hard way this past 2 weeks to ignore the alerts, to
There you go.
ignore both of them. Someone
That
had a suggestion in community that said, hey, maybe we should sell a strangle because it's going nowhere if both alerts hit. So I didn't
I'm
back test. I have not back tested that, but
or
in
buy
it,
a strangle. You could even make
yeah,
an argument to buy a strangle.
yeah, yeah. Um, in the case of Walmart, it's just been bouncing right around the 200-day SMA, above and below, and then back above, and
Yeah.
then back below. And
Trigger, trigger, trigger,
yes,
trigger,
yeah,
trigger,
and
trigger.
going nowhere.
Yeah.
Um, when you set up the alerts as demonstrated tonight, do all the alerts come in, or do they auto cancel if not meeting all the requirements at that 2-week earning time frame to make them actionable leads? Um, every day, Trade Machine goes through all the alerts, whether it's this alert or the pre-earnings or other alerts, paid to dip, whatever. And if the alert, the conditions, the technical open conditions in any alert are met, you are going to get that information
Yeah,
that day.
you're only going to get an alert if it's triggered.
Right,
Otherwise, we don't send it. That's the point of alerts. It's that we're checking everything for you, and then we're saying, hey, you said you wanted to see this. Well, here, now is time.
right. And it does it starting at 10:30 New York time, approximately between 10:30 and 10:40 in the morning, and goes on through the day, the trading day.
Right.
All right. Okay, I answered that. Can you please show how to back test for a zebra? Now, I have not back tested a zebra yet, but I will. You give me the stock you want. I will back test the zebra, which is, if it's a called zebra, it's a long stock substitute.
Right.
Too long in the money options, approximately 75 deltas, and selling one at the money 50 delta. All right, but I'll put a sample one in the community tomorrow.
Actually, while you're talking, I'm going to share my screen and show people how to get to community, but keep going, Max. I might as
All
well
right,
just do it.
all right. Can you adjust the SMA length constraint? Absolutely.
Yeah. So, okay, here's community, by the way. Go to community. Okay. Agree to the code of conduct. Every time you log in, you have to agree to the code of conduct. So if you break the code of conduct, then we ban you from Capital Market Laboratories products for life. But you've been in community like 13 times, we'll say actually you violated contact 13 times. So I don't mess around with people bullying. I will end every access you have to any product I ever have for the rest of my life. Don't do it. So if you want to, here's Max. If you want to ask Max a question, just hit oops, chat Uncle Pops, and then say, I have a question. Just ask him whatever you want. Just
Yeah,
type whatever you want.
yeah. Reminder, put a
Yeah.
zebra in community tomorrow, back test.
Here, put a zebra in community. Uh, Someone is going to read that. What the hell? And by the way, since you asked about the technical condition, yes, you can go to technical open. This trade says stock is above the 50-day moving average. You can put any moving average you want, or you can just knock it out. Just say, forget it. I don't want the moving average. So if you want to put it back, just go to stock price above 50-day SMA. Maybe you also want maybe you want above the 200-day moving average. You can do that too. It's up to you. Anything you want. You can always customize the back tests. I'll stop sharing.
Okay, thanks for now recording and distributing the recordings. Very valuable info to review. Ophir, that
Yeah.
is a compliment for you.
Oh, thank you.
Why not a back ratio for upside?
You can backtest the back ratio.
Yes, you can.
Just remember, guys, you are not limited to the strategies we're showing you. I just tried to make it easier. But you can, in the custom strategy, you can create any four-legged strategy that you can possibly fathom. Personal to you, and you can have as many of those as you like. You can have a portfolio of trades, portfolio of
Yeah,
strategies, as many as you
yeah.
like. There's no limit. Have 100 different weird spreads you want. It's cool with me. I love spreads.
All right. Someone's asking, is there a way to auto-populate the actual trades into your brokerage account? That would be sweet. That's a question for you.
Yeah, not yet. That's actually a cybersecurity risk, and so that that changes a little bit of our infrastructure, right? Because that means if someone hacks your TradeMachine account, well, now they have your TDA account or whatever, your Thinkorswim account. So we have to be careful.
Okay. I've been practicing vertical spreads / calls and puts that are delta neutral or close to it. What is your opinion on this strategy? What are the advantages, disadvantages of it? By the way, awesome site, really enjoying. Okay, well, Fear's gonna probably have a comment on this. I think that is an absolute very good strategy to backtest on a sector, on individual stocks that you're interested in. And assuming you have some fundamental or technical reason, now's the time I want to check this kind of strategy with these kind of stocks.
Yeah, it's a straight vol trade. So I love it. I'm gonna share my screen and show people who maybe didn't understand the question, or even the person who asked the question, why is it a vol trade? So I'm gonna share my screen, just show you why this is a straight down the middle volatility screen trade, and I really I like it. Okay, so someone said, let's say these are days to expiration. So you have 30 days to expiration option here. And let's just take the 50 delta. Okay, at this 50 delta is code word for at the money. Okay, and then we have the same option. And let's just say it's a call, by the way. Just it doesn't actually matter, but let's just say it's a call. And then you have the same one, but it's 60 days to expiration. Okay? Same call. All right, so you want to buy this, right? And then you want to sell this. And so go, why is this? Make the visual will be more pleasing if I do it this way. Okay, so let me see. 10, 20, 30. Okay. Imagine each row is 10 days. 10 days, 20 days, 30 days, right? Okay. 40 days, 50 days, 60 days. Right. So you're long this one, short this one. Since the deltas are the same, this 60-day option is actually this 30-day option plus another 30-day option. So if you're buying this and selling this, what you're really buying is the 31 to 60-day options. And so what you're selling is the vol in the first 30 days. This is a vol trade. And that's perfect. If you have reason to believe that vol is going to go down, you want to do that, that's fine. You're selling vol days 1 to 30 totally covered, and you're hoping days 31 to 60 their vol sticks around. I love that type of trade. I have no problem with it whatsoever, and you can definitely backtest that in TradeMachine. Create a custom strategy and test it. Absolutely big fan of those trades. Big fan.
Thank you. Beautiful demonstration. Okay.
Okay.
Next. That's a good point about the number of alerts. Too many alerts could cause one to begin to ignore alerts or feel overwhelmed by the volume. It does happen. Mm-hmm. So do you have a recommendation to optimize the use of alerts?
I think I would decide, I'll let you answer too, Max, but I know how many trades I want to have on at once. And once I hit that, I don't get annoyed with alerts. I'm good.
Yeah.
But I would rather get more than fewer, but this is just me because I want to have that many trades on. So, if I don't have enough trades on, then I'm like, well, I need some more alerts.
Right. So I may have, I'm always looking at my portfolio of option trades, and I have just based on the way it's set up with my CML long stock-like positions, I have a natural long delta bias, and I'm always looking to complement that with short deltas, short volatility, et cetera, et cetera. So when I get alerts, or I'm looking at the Today tabs alerts, I have a focus, and it's not necessarily long delta trades or long volatility trades, unless it's something that's really outstanding that I'm aware of. I'm looking for short vol, bearish, to complement what I already have in my portfolio. Okay, is there a chart to show us newer members what is common for how the sectors work? For example, if XLK or XLE is moving up, what would be the sectors you would expect to pull back? I am not competent to answer that
Yeah,
question.
so I would actually say I wouldn't necessarily want to say so because things are changing so much, but a really good thing to do. I don't know if you're a pattern finder member too. If you're a Trade Machine member, you can get pattern finder for like, I don't know, like $9 a month or $11 a month. Look at what this, let's say XLK, which is tech, right? So
Tech,
so
right.
look what XLK is doing. Let's just assume we're just a supposition. Let's say it's been in a bull market. Okay, and you're like, okay, I'm gonna start getting these triggers because it's a bull market. I got a lot of tech set. Go to another one like XLE, which is energy, or XLU, which is utilities, or whatever. XLF, which is financials, and look how it's doing. And just look. Just be like, oh, are these in are these divergent right now? If so, then this might be a good two sectors to have in there, right? One versus the other. That's the best I would do. I would actually just look.
All right, cool. Someone's asking, can you describe the new AI component?
Yeah, for sure. So actually, let me share my screen. So go to the Learn tab. Does this work? Let's go. All right.
I think if you
Yeah,
look at the technical open condition, I think you can
here.
click on a definition right there.
So you can go here. A remarkable finding in finance, skew and kurtosis as a profit center. So type skew and kurtosis, go here, and you'll get an 8-minute video, and you'll get a much longer than an 8-minute video, and you'll even get an even longer than that one video with Q&A. So that's it. A remarkable finding in finance. So just the Learn tab is the answer. And by the way, if there's ever something you don't find on the Learn tab, or you're just like, I can't find it on the Learn tab. I just need someone to give me the answer. You can ask Max, or you can always go to your account here. Oh, I'm an administrator. I believe you can send a support request here. Just email support.
Yeah, email support.
Yeah, you can just email support.
All
So
right.
you got Max, you got these, you got support, Learn tab, whatever you want.
All right. I want to try and finish all these.
Yeah.
Is there a sell high IV or IVR, IVR being IV rank, I'm assuming,
Yeah.
strategy built in? There is not. But what I do for any strategy, I will look once we have what the stock is or sec or whatever um, index, I will look and see what the actual IV is, what the IVR is, what the IV rank is, excuse me, and what the IV percentile is, um, and make a judgment. Do I want to be buying options net or do I want to be selling net? So do I want to be long vol or short vol in this trade? So there won't, that'll determine whether I put something on for a credit or a debit. Okay. Are the two previous sessions available on Trade Machine? I assume
Just
that,
email support and you'll get them. Yep.
okay, so they're not on Trade Machine, but support will get you a copy. Not related to Trade Machine, but where do you recommend we research a company which may or may not be covered by CMO Pro? Specifically looking at NVIDIA. You want to give us a short answer, Oki?
Yeah. This website, cmlviz.com.
CMLviz.com.
It's free.
Okay, someone else is asking about previous recordings. Just send an email with the same email address that you used to become a member of Trade Machine.
Or just
That'll,
ask Max in community because Max will be talking to support and he'll just say, here.
okay. If I can do that. Is
I,
3 year your
I volunteered
favorite
to.
back test time frame? It is my favorite starting point.
Yeah.
I like to go 3 years and in, three
Yeah.
years, then 2 years,
Yeah.
then 1 year.
Yeah. I do 3 years in 1 year or 3 years in 6 months because volatility moves in regimes and I want to make sure like, think something hasn't changed in the volatility regime. But I don't go longer than 3 years anymore because things have changed, guys. Like,
Yeah. Yeah. Okay. Someone's asking, would like to get better with long strangles? Any additional screening touch criteria for better win rates? Look at the on the Today tab. Look at the long strangle technical. All right, and that'll give you additional technical opening and or closing criteria, as well as some stocks that are qualifying for that strategy. Thank you very much for the explanation and demo. No, there really isn't a straightforward rule on XLK up versus XLU down. Thank you, Mark. Do you take into account the liquidity when you select a stock? When I'm about to do an option trade, the first thing I look for is the bid-ask spread. Are these options liquid? If they're not, I move on to the next opportunity.
Yep. Yep.
And if the stock isn't liquid, the options are probably not liquid either. Would you agree with that statement?
What was what was the second thing you said?
I
I agree
said
with
if a stock, if you look at the volume for the day and it's 16,000 and Apple's trading 16 million, it's more likely that the options underneath that 16,000 contract
so
stock is not liquid.
I'll say this. There's a lot of people have a lot of ideas about liquidity. People talk about open interest, or Max just talked about volume. Liquidity is defined very clearly. Liquidity is two things. It's the width of the market. So how wide, how much space there is between the bid and the offer, the bid and the ask. That's one. And the second is the depth of the market, which means, are there 10 at the offer and 10 on the bid and 10 on the offer? Or are there 1,000 on the bid? I don't think anyone here is trading 1,000 lots. So if you're trading 10 lots or less, then all of a sudden depth of book doesn't matter. So that means
Yeah.
all you have to look at is width. And just because there's high open interest does not mean there will be good width. And just because there's low open interest does not mean there will be bad width. Just look at the width of the markets. If you're trading slightly larger, then also look at the depth, right? But I don't think anyone is trading in the 50, 100, 200 lot range that doesn't already know that. So it's generally a question for people who are kind of getting started option trading, really learning how to do it. Just look at the width of the bid and the offer, and don't
Right.
do a market order, a limit order, do a limit order. Don't do a
Never,
market.
never do a
They
market
should
order.
take that button off of all brokerages. There's no market orders.
All right. It's 8:01 Ophir, but we have three quick questions in the Q&A.
Go for it.
Just want to address.
Go ahead.
Can we get the largest 500 on that scan?
So
Well,
I could put that portfolio in, but you're only able to do 200 stocks. So I don't know.
right, if you're a platinum member. All right. I personally looking only at AI opportunities. Will TradeMachine continue to find more AI opportunities that we can use?
Yeah,
I
for
think
sure.
the answer is absolutely.
Yeah.
Ophir, how do you make more money when taking trades that have less chance of success?
Well, I mean, let's say there's something that's triggered 5 times, and it's lost 4 and only won once. But the 4 times it lost 1%, and the one time it won, it made 300%. You want that trade or not? Some people would say no,
Right.
but that's how you make more.
Yeah.
All right,
Okay.
everyone.
I think we got through everything.
We did in exactly an hour plus a minute.
Ophir, it's always a pleasure working with you
You too, Max. All right,
and
guys.
listening to you.
Make sure you hit him up in community. You'll get a recording. This is every Tuesday and Thursday. Have a fabulous week. Bye, guys.
And happy holiday weekend. Merry Christmas to all celebrating and everyone. Happy Festivus. Everybody can celebrate Festivus. It's this Saturday.
Absolutely. Bye,
Have a
guys.
good night.
Bye.